Welcome to Breakout Investors. Today we are speaking with the management of Snipp Interactive, ticker SNIPF, specifically the company's CEO, Atul Sabharwal. Joining me on today's call is Breakout investor Florian. This call is being recorded on August 23rd, 2022, and will be distributed via the Breakout Investor channel on YouTube and via our podcasting network. Look for Breakout Investor content wherever you subscribe to podcast. We are on Apple, Spotify, Audible, and most other platforms. Supporting materials for today's discussion will be posted on the Breakout Investors collaboration app, available on the app stores and at app.breakoutinvestors.com. The application and much of the research content is free. Those of you already on the platform can share your questions for the company using the Discuss tab in Florian's breakout room. So let's get the call started with me handing the call over to Florian.
Hey everybody, and welcome to our call today with Snipp. I would just say that Snipp is probably the company I am most excited right now. There are a few close contenders, but it's certainly up there. And yeah, I had the pleasure to talk to the CEO Atul before, and it was really fantastic. And I think you will all enjoy this call today as well. So we will start with with the slide deck and a small presentation, and then we will follow it up by our typical Q&A. So I guess let's get started then.
Thanks, Florian. And thank you for inviting me to this call. We have a short presentation today. I'll take you through select slides. Not all of it, but the rest of it makes for good reading to understand the context of our business. So, welcome to Snipp. We're a small, if you went to slide number 1 on the next slide, we're a small, company, about 80 people now. We work with some really large Fortune 500 companies to help them very simply, find new customers and keep them. Literally, that's the easiest way to think of our business. It's all, based on harnessing smart, intelligent data about users, and we help these large companies, get first-party data that's opted in by consumers in this world of privacy that makes them, more intelligent about who their customers are. If you went to the next slide, just to break it down a little bit, we are what we call a platform as a service company. Past loyalty is what we do. We take a lot of pride in being one of the leaders in machine learning when it comes to harnessing what someone bought, where they bought it, and how much they spent on it. We have an industry-leading platform that allows users to submit images of their purchase receipts, the simple receipt that gets printed out when you go shopping or that Amazon emails you. There's a wealth of data there that we capture for our clients, and we use that data to help them make intelligent decisions. We have a large base of Fortune 500 companies such as Microsoft, Nestle, Kellogg, Starbucks, Procter & Gamble. They all use us, not just in the US market, which is a majority of our business, but across the globe. We are right now in about 51 countries where our platform has been deployed. Of course, it's not very large in many of these countries, but we've actually got running programs now in these countries that will allow us to continue to spur our growth globally. The beautiful part about Snipp is we are actually profitable and debt-free. We are one of the few companies that we know of that are actually growing at a 70% plus rate on the top line, but doing so profitably. We're debt-free. We have about 6 to 7 million of cash sitting on our balance sheet. So we feel pretty strong and happy about where we are. Last year was a pretty transformational year for us. But based on this year, next quarter, second quarter results, we are on a financial calendar quarter. So those results should be out in the next couple of weeks, and I think people are going to be very happy with where we are. We are continuing to grow the business. We don't see the growth slowing down in the near future. if anything, it's accelerating. So, more of our clients are buying buying more of what we do. The data that we are collecting is becoming super critical to their operations, and as a result, they keep re-upping their contracts with us. So to switch to the next slide, we have execution capabilities that are quite global, like we've talked about. We've been listed on the Toronto Stock Exchange since 2012. We've been, building out the company one brick at a time, and I think we're at the point where we should be at, getting onto more and more investors' radars, people who believe in long-term growth stocks that we can demonstrate. Just historically, they can look at our financials and see how we've been building this company. There are about 280 million on the next slide, 280 million shares outstanding in the company. 40% of that, though, is owned by insiders of the company. So, we feel like it's quite a small float, actually, if you take out the amount that our insiders own. We recently got a strategic investor in Bally's Corporation. They own about 10% of the company. They invested in our company because they have been now, since the investment, we've been working to build out a customer acquisition and retention platform for them across all of their assets. Their assets extend from not just physical casinos, but they also have online iGaming licenses in every state in the US. That's a new industry that has been created since they deregulated online betting in many states. But they also own 16 television stations that they bought from Fox, and we are powering, or will be powering, the infrastructure underneath all of these assets that you're not even seeing the fruits of that deployment yet. First deployments in that space, which I'm not privy to talk about, but there's some pretty amazing programs that they're launching in market, start in September. So more on that as time passes and as I have the ability to talk about them. It's pretty market disrupting in terms of the way they're going to market. Our market cap is pretty low actually right now. It's 40 million Canadian, give or take. So we have a debt-free, we have a 70% growing 75% growing company with no debt, and we are profitable. So I'm hoping to now start working with groups such as yours to get the story out there, because we actually have a good story to tell, and an even better story that is evolving out of all of the hard work that the team has been doing. We've talked about being positive net income and EBITDA positive in 2021. We were the same for all of 2021, for half of 2020, and that, for 2022, we continue to see that same positive growth. Even though we have capital to invest right now, we don't need to blow up that capital and show big losses. We are going to continue to be profitable for the foreseeable future. Our focus is inherently on driving shareholder value, and we continue to, land and expand with our existing Fortune 500 clients. They're taking us to, not only are they spending more in the markets we are with them in today, but they're also taking us to new global markets with them to deploy our platforms now that we've proven to them that it actually makes, it gives them a great edge to understand the data that we can generate for them. We've also broadening our board. Recently, we had a former analyst from JP Morgan and the Consumer Research Equity Group join us. His name is Brian Tunick, and he's helping us think through how to unlock some of the value that has been, locked up in the company right now, in our current, market that we are listed on, etc. We also bought a company called Gambit Rewards earlier this year. It was a small acquisition, all equity, and the fruits of that acquisition are now starting to bear fruit. They would contribute, they started contributing to our top line, and it'll start looking even more interesting how this acquisition plays out over the course of Q3 and Q4. It's really growing extremely well for us. We haven't broken out the financials of that company yet, and we plan to start giving a few projections, for the next year, for that acquisition that we did and how it's contributing to our growth. So we talked about, we've talked about some of the attributes of the company. If you go to the next slide, you'll see, from a pure numbers perspective, some of the financial elements of the company. Again, we had 76% revenue growth last year. We continue to see pretty high levels of growth into the first half of this year. The results of our second quarter will be out in the next few weeks, and it'll just corroborate what you're seeing in this trend. Recurring revenue streams continue to increase. We are expanding to new geographies and expanding within the geographies we are in already. And our margin continues to stay at the 50-55% range. We might drop that margin slightly to capture even faster market share and higher revenue growth streams, but we should be in the same range going forward. And we have no plans to take on debt unless we find a significant acquisition that can transform the company to the next level. But for now, it's just steady state executing our business plan. So those are some of the trends that we are seeing in our business. On the next slide, you'll get a sense of the quality of our clientele, which I'm extremely proud about. We really do work with 8 of the top 10 CPG the consumer product groups in the world. We're now attracting new industries into our company, like Bally's, for example. And I think we are really poised to take off over the course of this year. We're literally taking off right now as we speak. So we're feeling really excited about where we are. We know the economy is kind of like, people are kind of worried about the future with talks about recession. But I think we are a pretty recession-proof company, given what we do for our clients and why they need us sometimes even more in a recessionary environment to run the types of programs we do. So that's a bit of overview on the company. Florian, do you think it's worth going into our product and some of the details around that?
I think there would be some value just giving a little bit of a high-level summary, Atul.
Yeah. Okay. So let's go through slide number 9. Yeah. So let's start with the next few slides, right? So these next set of slides tries to encapsulate what Snipp does, and how we make money, right? So the simplest way to explain what our platform does is we've created a platform that allows any kind of business to acquire, retain, and engage their customers. So we call it Snipp Care, right? And this platform consists of a bunch of modular components that clients can use. Think of it as an ERP solution for marketing tech. There's an SAP out there that everybody's heard of that does ERP for planning, inventory management, production, but no one's actually created a enterprise class technology stack in the world of marketing that covers every kind of tactic that a customer needs to do to acquire, retain, and engage customers, right? So it consists of a bunch of engines, as you're seeing on this slide. And if you flip to the next slide, what you'll see is an application of those engines in various types of programs. Today, you might want to have a customer buy something to get something. Tomorrow, you might want to have a customer buy something and collect points. And tomorrow, there are a whole range of different types of programs as articulated on this slide that typically in the industry, different technology vendors would do 1 or 2 of at the most, right? What we've done is we've taken a templatized approach and added an AI engine into our platform that enables our clients to literally spit out any kind of marketing tactic, and then using that AI engine, learn the shopping behavior of users, and then not only recommend the type of program, but also recommend the type of communication that has to happen around a user's shopping journey from the time they think of, hey, I might need a new pair of shoes, to the time that they actually go buy that pair of shoes. So if you look at the next 2 slides on this deck, you'll actually get a sense of the types of programs that we run for our various clients in different markets. They range from B2C programs, they range from business to business programs, but all of them have a common theme, which is they're all based on the fact that, you bought something. Typically in the world of shopper marketing, the world, the way advertising works today is that you can spend a lot of money communicating your message. You can do Google search words, you can do Facebook ads, you can do a lot of different techniques, television, print, and radio. But none of these mechanisms actually tell you that someone walked into a store and bought something, right? Or someone went online and bought something. So if you think about it, you as a consumer, you might eat Kellogg's cereal every morning, but you're not a customer of Kellogg's cereal. You're a customer of the retail store that you went shopping at. So as a result, the retailer who sells you stuff, Amazon, Walmart, Costco, they all know who you are and what you buy and what else you buy when you go shopping. But if you think of the manufacturer who's sitting on a shelf, they have no clue that you actually bought their product because they're not the one selling it to you. Someone else is selling it for you. But they have to care about the retailer that sells it to you, because without them, there would be no sales, and the retailers have all of the power in the equation, right? So even though all of these companies on these slide and the next slides are consumer-facing companies, none of them actually know much about their consumers because the person selling it to them is not their employee or their store. So we help, solve for that problem for these companies by doing multiple types of different programs for them and actually collecting that data set that that allows them to make better decisions when they go marketing to their users. So if you look at the next slide, and the slide after this, right? Our target market is a pretty large market. There's about 160 billion of MarTech spending just in North America. It's a huge number, and it's broken up into these three spaces. And in each of these three spaces, there are some pretty large companies, but everybody's taken a vertical look at the market where we've gone horizontal, and clients are saying, yeah, I don't need to have 15 different marketing vendors helping me execute 15 different types of programs, with each of the programs generating data that's sitting in a separate silo. What if I could actually put in an ERP type solution so that I could harness the power of that data across all of our programs? And that's where we are starting to fit in. So if you go to the next slide, as a result of building a platform like we have, it really has enabled and is enabling our clients to collect, in this day and age of privacy, a super data set that is not available anywhere else, that makes them more intelligent in many different aspects of their business, which also allows us to now start thinking about growing our business into other segments of the marketing stack because we have the best data. So if you think of the world just very simply, of advertising, when all of us were younger, there were only three forms of advertising: television, print, and radio. And you would hope and pray as a marketer that someone saw your ad or heard your ad, but you would have no clue someone went and bought your products, right? It's in the same way, like I'm talking to you guys right now. You can think of this as a television or a radio spend. I have no clue if it's going to, result in any of you going to the market and buying my shares, right? Because there's no way for me to close that loop. So in the same way, literally $1 trillion gets spent on advertising. And, in the olden days, there would be a television, print, radio expenditure, and clients would have no clue someone actually walked into a store and bought something because there's no way to measure that. When the internet came along in the second phase of the world of advertising, it was really good because it would at least tell a brand marketer or a marketing manager that, hey, if you spend money on Google, at least I can tell you someone looked for your product and saw your message. But for every Google, Facebook, Instagram, right, none of them actually tell you walked into a store and bought something, or you went to Amazon and checked out. They can tell you went to the storefront, but did you actually buy their product? Who knows, right? So for a marketer, it's a very interesting phenomena where they have to still worry about television, print, and radio, but none of these channels will ever tell them if someone walked into a store and bought something. So how do you actually know that you're getting an ROI on your expenditure, right? But the data that we collect is all based on someone actually buying a product. And that data then as a result becomes super valuable, because now clients can say, okay, I spent X $1,000 in this channel, Y thousand in another channel, and I can actually see what the attribution was of someone walking into a store or going online and buying my product based on the types of programs we were talking about a few slides earlier. So that's that's really the core value proposition that brands continue to use us and continue to come to us to do more and more different types of programs, because as they see the value of the data, it kind of drives them to do more programs, which gives them more data, which makes them even more intelligent, which makes them come back to us again to do more programs, right? And we're seeing those cyclical trends, play out in our business over the last, year and 4 or 5 quarters, as the value of the data is becoming stronger and stronger. So that's something about our products. Just switching tacks, right? We did buy a company called Gambit Rewards. This is a really, really interesting company. It allows, in order for people to use our platform and in order for clients to benefit from it, we need people to participate in a program. All of you on this call, I can guarantee you have at least one hotel, and one airline loyalty program you're a member of. All of you. You all have cards there, right? If not, a bunch of retail loyalty programs, right? But none of you probably have a loyalty program you're a member of that is like of a manufacturer, like of a Coca-Cola or a Pepsi or a Kellogg's, right? So how do you enable people to take part in these types of programs? This is where we entered into a acquisition agreement with Gambit Rewards. Gambit is the first and only company in the market right now that allows you to take your loyalty points and actually place a bet on various types of sports games. It's sports betting, which is an industry in itself, but instead of spending hard dollars to bet, you can actually use your loyalty points to place these bets. So being the first in the market and being the only regulator approved company that allows you to do that, right? It suddenly opens up a tactic for us that makes it very interesting for some of our clients to expose out to regular users like us, because it's innovative and it's engaging and it's fun. There's also not, since I'm already at the 4:30 mark here, we can go deeper into this if there's more interest and questions. But there's a huge lack of mechanisms to spend points that have accumulated on companies' balance sheets, and that's actually a liability for all of these large loyalty programs. So it's a very interesting business. It's regulator approved. It's the first in the market in a hot segment that's growing. It attracted Bally's to us. Bally's, for example, is limited to doing online sports betting in 6 different markets and the 16 casinos that they have. With our platform, they can now extend that to all 40 markets, all 50 states, sorry. And in the discussions with them, what they realized was they didn't have a robust enough loyalty program to do that. And guess what? Snipp has a very robust loyalty platform in itself as part of the Snipp Care platform. You can see the synergy there where they retained us and they invested in us, because now we're helping put together a global implementation of a loyalty program for them that they can then use along with Gambit to allow their users to also gamble in states and markets that they don't have licenses for, or any kind of physical presence. So there's a lot of synergy in our acquisition with Gambit. They're already contributing to our top line, and just to move to the last slide here. We feel like this is our focus. Sorry, we feel like we continue to hit the accelerator on our strategy. We aren't changing or adapting. We don't need to for this market. We got more clients coming to us than we can service at this stage. We've been recruiting quite heavily over the last couple of months, and we feel like it's a really good time to invest in Snipp. I guess, yeah. Stop there.
Well, thank you very much. I think that was the best presentation I have heard yet from you. So that was really, really fantastic and should give the audience a very good flavor of what the company is all about. I guess I would invite the audience to come up with questions. And in the meantime, my first one is you mentioned first-party data. Can you maybe go into more detail about how significant that is at the moment in the advertising space?
So Florian, thank you for that. So let me talk about zero party and first party data for a second, right? So zero party data is data that is really critical for any kind of business today as privacy regulations become stronger and stronger. We had GDPR in Europe, we had CCPA in California, Virginia has a new law, there's a federal law on the books right now coming on where you can't just use someone's data willy-nilly to do what you'd like, as Google and Facebook have been over the course of all these years, right? So cookies, for example, are going away. We can't in the future just drop a cookie on your phone and then trace your behavior online. That's illegal. It's already gone away, right? So there has to be a mechanism for a manufacturer to ethically collect your data and use it with your permission. It's your data after all. That's what zero party data is. In all of our programs, we have the user who opts in to give us their data in exchange for something. So think about your airline loyalty program. The airline has signed you up, collected all of your data, and then as you fly, they get your points, right? And an airline can do that, a retailer can do that, a hotel can do that because they're collecting your cash. What happens to the vast majority of the market that actually doesn't collect your cash because they don't sell to you directly? The example I was giving you was eating Kellogg cereal every morning, right? For those clients, they have no data about you. And where they could go to Google and Facebook, the Procter and Gambles and the big advertisers of the world, right? They can't get anything from those guys anymore because they're not allowed to sell it to them. So they have to create their own data sets. So in order to create their own data sets, they need to come to companies like us and create these programs that will allow you and me to voluntarily give up our data in exchange for something. And that's the importance of zero and first party data for the future.
And then do you see there's a lot of talk about a recession and the advertising market pulling back. Do you see any effect on your business in that regard? Or is that something you worry about? Or
The funny thing is, as the economy tightens up and consumers start spending less discretionary income and think more about their purchase decision, the importance of doing promotions increases. It's kind of like it's recession proof from that perspective. So clients have to work harder to convince you to buy their products in a recession than they do when you have extra cash, right? How do they convince you? They'll do more promotions with us. So no, we don't worry. We actually, I don't want to say we welcome recessions, but the last time, the economy started going slightly south, our actual business started taking off because more clients needed to do more programs.
fantastic. Otherwise, maybe could you go into some more details about Gambit, about sort of the opportunity compared to the business you already had before? Is it going to be as significant for you? Is it going to be just a nice addition, or how do you think about the opportunity there?
Okay, so the Gambit opportunity is very interesting, and there's synergy at multiple levels, right? So let's start with, if you want to go to slide number 16, it's got the synergy. I didn't go through it in gross detail, but the way it works is that online gambling and sports betting is a new industry, right? We don't have any clients in that industry. So Gambit immediately gives us the ability to go into that industry. Now, even more so with one of the big three casino companies as an investor in our company to just deploy plain vanilla loyalty solutions and promotions for those entities, right? So that's the first level of synergy, right? It allows us to break into the industry quite credibly in this new high growth industry as more and more states. California is about to legalize online gambling, right? And all the players in those markets now can use Snipp just like any other company for our plain vanilla solutions. That's number one, right? Number two, if you think about a loyalty program today, right? You can redeem your points in the case of an airline program for flights, in the case of a hotel program for hotel rooms, in the case of a credit card program for gift cards, etc., right? Now, think about this. You can't redeem your points right now to go bet on a game. You just can't. You can redeem your points to get free golf, to get free Walmart cards, free hotel rooms, free Uber rides home. So all of the loyalty programs out there today all have similar kinds of incentives that they can give you and me to exchange our points for, correct? Nobody today has the ability to exchange your points for, a gift card or an experience to go out and take part in iGaming and sports betting, right? Now Gambit allows us to offer that up. So in other words, it becomes just another incentive that we can deploy out on our platform. Today, Snipp's platform supports cashback via Visa cards, PayPal, bank transfers. It supports any kind of gift card, across the planet. If there's a gift card program, you can probably buy it through our API. So this becomes just another incentive, but a unique one, which we now own. Now, here's the economics of it. If I exchange 500 points for a $5 Walmart gift card, Snipp actually has to pay Walmart $5. And a client would refund us $5 plus some transaction fees. But now if Snipp is distributing a Gambit Bali's card, because it's now actually branded for Bali's, right? I actually am paying myself the $5, right? Because I don't have to pay Walmart for the $5 face value of the card, or I don't have to transfer the $5 through PayPal to a user's account for the point redemption. I'm now actually the owner of that particular incentive solution. So it's a very profitable business for us at scale because I am now the owner of the actual incentive that I'm distributing on my platform. It's also a very asset light business. So, it's very, very cost effective for us to deploy it. And, that's important because the one thing Snipp doesn't have today that we can monetize in the future is we don't actually own users on something called snipp.com or a Snipp app. Everything we do is white labeled for our clients. But now that Gambit is the incentive, just like I could give you an Uber gift card or a Walmart gift card, I can give you a Gambit gift card. Now I'm actually a user of Gambit, so I actually have my own audience that I am building through Gambit that I can then monetize for some of my other programs. So as an example, tomorrow I'm doing a program for, say, Monster Energy, and it's a program which is buy a 6-pack to get $5 back, right? Now, where do clients advertise these programs? Today, I do about 400 to 500 programs a year, and I don't actually take any dollars related to the advertising of the program. I only take it as technology license fees for the execution of my platform for the program. So think about this. For every one of the programs that we do, clients are spending anywhere from 100 to 5 million if they have television in promoting and advertising their program to mass markets, right? If I could build my own audience of a few million people, suddenly I could capture some of that budget from the clients for the same programs that Snipp is executing as part of its software platform, right? Where am I going to get that audience from? I can go buy it from Yahoo, I can go buy it from Facebook, but then I'm paying them all the cash for it. But if Gambit's user base increases, suddenly I have my own audience to market that same program to, correct? So, just for some, in terms of some numbers, right? As we deploy Bali's out, Bali's has upwards of 15 million users on their platforms and in their casinos. If we could even create a small fraction of that as Gambit users, as well as from Gambit's other clients that we are continuing to sell into, and you'll see the numbers come out shortly. Suddenly we're creating a user base that we own that we can monetize in multiple different ways. So there's a lot of different tie-ins with Gambit in our existing business, but the simplest way to think about it is that they're an incentive that sits on our loyalty platform. And because they are the end incentive, they also own the user, and we can then start monetizing the user down the road. But we also monetizing the user who comes in funded by, say, Monster Energy with those $5 or $10 to place a bet on tonight's Premier League game. And, through that process of betting, we at the house, we also make money.
Fantastic. And I would say very, very exciting opportunity that you have in front of you, because you basically monetize something that doesn't have a lot of value, right? And it comes almost for free. It's almost like a little bit of a float that you're utilizing. So it's really exciting, for sure. So you mentioned 70% growth rate, not talking about the next quarter, obviously, but just in general over the next sort of years, maybe. Do you think that kind of growth rate is sustainable, or is it going to moderate down? Do you have, and obviously you're not giving guidance as well, but just from a gut feel, how do you feel about that?
I think I think the market is really large. Just the promotions business is a 160 billion, size market, right? Add in sports betting and iGaming. I don't even know what the market size is for that, but it's a nascent industry, correct? That is just about, it's not even legalized in all 50 states yet. It probably never will be, but it's still not legalized in a lot of states. So you take the combination of these two together and you look at the world of loyalty and loyalty programs and the history of them, right? So I think, we are in a place where we should be growing north of 50% on an annualized basis for the foreseeable future. And these rates that I'm talking about are organic growth rates that are not driven by acquisition right now. As the Gambit business, matures, as the sports betting industry matures, I think it's safe to assume that for the foreseeable future we should see those kinds of growth rates.
Very
To
good.
give you a sense of comfort, yeah. So Florian, to give you a sense of comfort, we did 8 million in 2020, we did about 15 in 2021. 50% growth rate from 15 million is a doable target for this year, if not higher, right? And again, I'm talking about profitable growth. So there are other levers that we can pull depending on which metric of the financial statement you want to actually maximize on, right? As a small company today, because we were funding our growth through our own cash, we had to do it profitably, right? Now we have cash, so we can deploy someone else's cash, which was Bali's investment in us, to accelerate that growth in the same format, so that we don't actually be one of those companies that is growing as much as we are losing cash on the bottom line. So there are many opportunities and paths in front of us that we are always considering. The first is like, just let's keep growing the company profitably at these types of growth rates. Then we haven't even talked about on this call a third business of ours that we just invested in. We're starting to invest in, which is Snipp Media. One of our board members left the board and joined us to operationally run that, because we can create a pretty big media network by creating an audience. Because we already have the distribution of programs from our core business. Like I was saying, we do 400, 500 programs a year. If I capture just $100,000 for half my programs on the media side for my own programs, you can understand how we could continue growing the business, right?
So I would like to highlight one thing you said here, and that is you have enough cash. And not only that, but a general point is what you do in terms of capital allocation and raising money, because usually what we are used to is these terrible deals with warrants and units and whatever kind of monstrosities that companies of your size typically have to go into. And it's literally the opposite for you, right? Bali's invested at a good premium to today's price. You got a lot of cash from that. And not only that, but in terms of the acquisitions you did, I think that was really very well structured, and just in general, it's amazing to find these kinds of yeah, these kind of things in a microcap like yours. So that's really, really, I just want to emphasize that.
Yeah, thank you for that, Florian. We have more money in the bank now than Bali invested in because we've been cash flow positive for a while now, right? So our cash balance is actually increasing, right? But we are, my biggest cost is finding good people. If someone asks me what keeps you awake at night, it's like the market for good talent had become so scarce. It's turning now, thank God. It's kind of unfortunate, but it is turning, right? We can actually now start finding people because nobody, the talent was a huge premium, and my only cost is really people right now. So, we don't have any plans to raise money at these valuation rates at all. We are also debt free. If I absolutely needed money, and the only reason I would ever need money at this current point of our existence is if we found a really, really good transformational acquisition, right? We could still take debt to do it. I still have capital. I mean, I'm not taking debt. I'm not raising money. I'm not issuing any kind of funky financial instrument. Again, profitable growth. End of story. That's our mantra.
Excellent. One last question from me, and then I want to really invite the audience to ask something, and that is about your margins. How should we think about that? Is that going to stay in that 55% range, or how do you think about that?
It's a great question. So we really have three businesses in Snip, if you want to think about it that way, right? I actually call it Earth, Moon, and Mars, right? So the mothership is our core business where we do promotions and loyalty marketing. It's the tech infrastructure to enable, those types of tactics. Moon is what we call Gambit, which is just an incentive. Moon is part of our Snip rewards network if you looked at it as part of Earth, but Moon is also a moon in itself that you could visit if you so wanted, right? Clients like, clients who only want to enable sports betting and iGaming as part of their programs can just go straight to Gambit and integrate with the API. Now, margins as it relates to these, right? Our core business of Mother Earth is a 70-75% margin business, as has been shown over many years if you look back at before we bought Gambit, right? When we hit cash flow positive on Earth, which is Snip, we invested some of that capital to grow that business as well as set ourselves up to be able to do an acquisition easily, right? So we sacrificed some of those margins to come down to the 65-75% range. As Gambit grows, the most important metric for Gambit's growth is user acquisition, right? Now, it's a consumer business, right? But it's driven by business to business relationships. It's not me marketing to consumers. I couldn't do that. It takes a lot of money to market to a consumer, to bring them into an app and keep them in the app. We don't have that kind of capital available to do that. But we do have capital to deploy out to business connections, like going to Chase Rewards for the loyalty cards, going to United Airlines, going to all the different large loyalty programs, going to all the hotel programs and saying, hey, you should offer this up as a cool incentive for your loyalty members, right? So margin in that perspective for that business is going to be lower, way lower, right? Because the metric there that we're going after is user acquisition. And as we get user acquisition, revenue growth will also actually spiral if we are successful in that strategy, right? We don't need to make a lot of money in that business from a margin perspective, in the sense of I'm happy to sacrifice my margins in that business. Put it this way, the house never loses, right? And the house can decide the odds. If you just think of a traditional casino business, right? We could run that as a 25-30% margin business, and we will at scale. But for now, we will sacrifice some of the margins of Gambit to continue, distributing Gambit and getting penetration into more and more programs out there. So the blended margin starts coming down between Earth and Earth and the moon, so to speak, right? That's the second business, right? That range of 45, 55%, just say 50% is where we want to end up in the near term on margins, right? But then you add in our third business that we've planted seeds for, which is Snipp Media. We need, and we have this massive opportunity, which could be theoretically even larger than Gambit faster, but it is the most, most nascent business in our portfolio right now, which is creating a media business around our own programs. Whether that be distributed, through the Snipp programs that we run for clients white labeled, or whether that be distributed into the Gambit platform. At the end of the day, it's all about, targeting a user to come into one of our promotions, right? So that business has to be invested in right now. And, that business will also be a traditional ad tech business. If it at scale, it'll be a 40% margin business, right? So, long answer to your question, you can expect 50% plus margin in our company this year and into the early part of next year. And after that, it really depends on how successful we are with, our media and our Gambit businesses.
Excellent. Fantastic answer. Really, really good. So do we have any questions from other people than me? Because I could go on.
I'll throw one in there if you don't mind.
Of course not.
All right. So one question that comes to mind, and this is just something out of ignorance for me, competition, barriers to entry for what you're doing, the way you're collecting data. Can you talk a little bit about that?
Yeah, Brad, great question. So if you were to, can you guys hear me? Sorry, my phone rang. So
Yes, we hear you.
yeah, sorry. So if you think about, okay, let's talk about competition, right? So I'm going to stay with this concept of Earth, Moon, and Mars, right? Thank you for going to that slide. So we have, in one way, you can look at our business and say we have no competition, and the other side, you can look at our business and say, oh God, these guys are in a super competitive field, right? So let me break that down. In the world of vertical programs, like say just a points-based loyalty program, we compete with tons of different players. And all of them, some of them are multi-billion-dollar companies, right? But if you say, okay, we want to do loyalty for manufacturers that sit on the shelves that don't collect your cash because of my purchase validation Snipp check engine, we compete with nobody, because all of those enemies of ours in the world of Snipp loyalty are actually clients of ours because they license our tech. So we're kind of frenemies. So, we've got very little competition in the world of Snipp check. We've got a lot of competition in the world of Snipp loyalty, but we've got practically very, few and far between competition when you combine Snipp check with Snipp loyalty. That's one example, right? Or take Snipp rewards, which is our incentive engine, right? If you think of the world of incentives, there are big companies out there like Blackhawk and Incom, right? But we are integrated into Blackhawk, we integrated in Incom, and they love us because we, direct, 7-figure business to them every year, each of them, right? But we also integrated into other players who are by themselves pure rewards engines. And now if you add Snipp check to Snipp loyalty to Snipp rewards, no one has that kind of comprehensive portfolio that's so modular that can be used, as a standalone or as part of a full stack. And the same concept in the world of rebates, right? There are a bunch of rebate companies out there. Blackhawk, for example, bought Pargo, which is one of the world's biggest rebate companies, massive, but they all work in the world of companies that actually collect your cash. Well, now when you start adding the other components in, same story. So take Gambit too, right? There's nobody in the world of Gambit. So Gambit sits within our Snipp rewards platform. It's available as a standalone reward if you want it. You don't have to use any of our other engines. You don't have to use any other incentive from our engines, right? You can just want Gambit. So if you look at the world of sports betting right now, there's not a single player out there that has got regulatory approval to go out and take your loyalty points and give you $5 worth of sports bets that you can actually win money and hard cash on. So kind of a, again, long answer, sorry, but it's we have a lot of frenemies that we empower, but we also strategically compete with.
Great, thank you.
Do we have any other questions? Brad, nothing from you either?
Well, I did have another one, but he kind of answered it a minute ago. I was looking through your solutions on your website, and I was just trying to wrap my head a little bit around. Looks like you do have multiple things, but I think those are all go in. If I'm understanding what you said right, I think your contests, your receipt processing, your customer loyalty, digital rebate management, all that stuff that you have listed there under solutions, all goes into that number one Earth. I think you called it Earth, the promotion and loyalty marketing business. Am I thinking about that right?
That is correct. So I think on the following slide we call it Snipp Care, right? So like all of that is Earth, right? That's our bread and butter. What we built Snipp around, which was we can give you a horizontal ERP type solution in the world of promotions and loyalty. That's all Earth, right? As you'll notice in this stack, there's no media. We don't place media. We don't do creative services like an ad agency. So the two things that we don't do on this page, we don't do creative design and media placements. That's today, right? We'll never do creative design because that's just an agency kind of job, right? But media placements for the programs that I'm running for you, which are on this slide, hey, no reason why we can't do it. We also have, by the way, better data based on people's purchase habits now in this cookieless world that allow us to, target people better than how you've been doing it before, which was based on cookie data and which doesn't exist anymore anyways. And credit card, maybe, Experian data, et cetera. That's Mars, the media service, right? And then Moon, why Moon is Earth, Moon, and Mars. Moon is part of, if you go back to the previous slide, as part of Snipp Rewards, Moon is one incentive, right? But we happen to own that incentive. A client calls me tomorrow and says, hey, I want people to sign up for my website and get an Uber ride home. Great. Then I gotta pay Uber for that ride. If the client calls me and says, hey, I want people to come and sign up for my website and make a bet in tonight's Warriors game or on tonight's Liverpool game, awesome. I actually am the provider for that. That happens to be Moon within the world of Snipp Rewards, which is Gambit.
Gotcha. So on the Mars business, can you give me just a practical example of what that might look like in the future?
Okay, yeah, absolutely. So that one I'm really excited about. So if you go to slide number 11 or 12, you open up any one of those slides and take a program take this program for Graco, right? Or for Nestle or for Clorox, right? Take the Clorox program, right? Think about it this way. If you have a program out there, you're going to have to advertise it to users to say, hey, I have a program out there, come sign up for it. That's my advertising, right? Correct? Now,
yes.
How are you going to advertise that? You're going to go to Google, you're going to go to Facebook, you're going to do email marketing, you're going to do social media marketing, you're going to do radio in some cases, you're going to do, banner ads, you're going to do television in some cases, right? Great. So the way it breaks down is you're either going to do digital advertising or you're going to do traditional advertising. Traditional is radio, print, and TV. Put an ad in a magazine, etc. Digital is all the digital stuff that the world's excited about, right? Okay. Now, if you're thinking about digital, right? Now, these are my programs. This Clorox program, it's the PowerPoints program. There are about a few million users in this program. Needs to be advertised out there. If I had a audience. So today I could go to a client and say, hey, let me take on the task of also advertising this program that I'm building and maintaining for you on my tech platform. The client will look at me and say, okay, here's my demographic, right? Go target them. What would I do today? If I was doing that today, I would go to, the ad networks. I'd go to the exchanges. I'd go to some of the publishers who are in that, in that target base of audience that I'm trying to reach, and I would go pay them money to put ads on their platform, correct? There's no margin in that for me. It's just a lot of services. However, in the future, right, if I actually own the audience, then all that margin would be mine. So a typical ad tech business is a 35-40% margin business, right? If I actually built my own audience on Gambit, then I have people then I can target directly, correct? So now the question is, how do I build my audience in Gambit, which is a whole separate strategy that we are obviously executing on. And as that revenue stream goes up, our audience is going up. And as that audience goes up, it'll feed Mars because Mars can then use it as a audience to target. That's one mechanism, right? There's another mechanism that we are building out a effective audience that is cost effective to recruit, right? And that's through the banking networks, which I haven't really talked about today. But like I said, it's Mars, right? But suffice it to say for today that we are building out audiences that we can monetize. One plank of that is Gambit, because now when Gambit becomes an incentive, right, for Clorox's program, that Clorox user that Clorox has spent all this money getting recruited now is exchanging points for Gambit, becomes a Gambit user. Now they become my user. So it's a good audience. I can then monetize that user for, Kellogg's, for P&G, for anybody, right? So that's the Mars business, right? Working with banks is the other plank of that business, where because of our receipt processing engine and our AI around, think about it this way. When you go and buy something at Walmart and swipe your credit card, all that anybody knows is that you went to Walmart and you spent $200, but they have no idea what you bought inside Walmart, correct? Nobody does. Nobody knows that except for Walmart. So our SnipCheck AI engine actually, from our program history and from, the different tactics that we have, actually can break down that purchase into its associated elements at the store. So now if I could take that and go to the banking industry, which is what the media network is, and say, hey, you're a credit card publisher and you have 30 million people in your network who have credit cards. Would you like to allow them to go to Walmart and swipe their card and get that dollar off? Snip can enable that. That becomes a huge audience. I can go to Kellogg and say, would you like to get exposure to those 40 million people? Because we can now close the loop on that credit card swipe at the SKU level. So that's the other element. I know this is kind of like, I can spend an hour explaining the whole media business to you that we are developing. But the idea in a nutshell is we want to own an audience that is cost effective, where we don't have to pay all the money to the publisher, but we are the publisher. The Gambit one is easy to understand. The banking side is one step more complicated. Today on your credit card, you can, if you guys open up any of your credit cards, you can add offers to your credit card with 2 clicks. You can get a 5% off your next Starbucks purchase, 10% off your next purple mattress purchase, etc., etc. But they're all based on retailers making those offers inside your credit card. No manufacturer has been able to do that and expose themselves to the credit card audience. But Snip can enable that through the AI engine of SnipCheck, our receipt processing technology.
Great. That's a great example and a good answer. Thank you so much. And I think that's all I had.
So if nobody else has questions, I guess one last from me, and that would be in relation to the Bally's investment. Do you think they had more in mind than just the stake they got? And maybe in general, do you see yourself as an acquisition target? Would you even sell? How do you think about that?
So I don't see us as an acquisition target at these rates unless someone is really willing to pay fair market value for us. Y'all would agree just on the metrics that, we are valued at less than 2x our revenue. We're growing with growth company multiples. And that's something that I have to solve for, right? Which is like, why does the market not really like us or give us a fair value compared to some of the other companies that we see out there with not even, 20% of the metrics that we have, right? Having valuations that are way higher. So we got to fix that. So from an acquisition perspective, no, I don't see us as an acquisition target unless there is fair market value associated with it, and or if fair market, so fair market value can be the cash or equity, but at least the structure of what we go into if someone bought us is actually more favorable to unlocking the value that we feel is hidden in the company, because the stock does not reflect it. So if someone like a Bally's was, the answer to unlocking the equity value that reflects our business, then that would be something we'd look at, but otherwise we would not. So that's the first thing. In terms of, is Bali interested in expanding the relationship with us? The simple answer is yes, but we have to launch with them, right? I mean, they have some very, very interesting plans. I mean, as a company, as Bally's as a company itself is very innovative. And if you guys read about the history about how they've aggregated up this entire space, licensed the name, gone out and got the digital licenses, bought into the TV stations for content, it's a really fascinating business that is being built out there, which is a great opportunity for us as Snipp. So I think the simple answer is yes, but we have to prove to them that we can actually deploy at the scale that they want us to. And that I have no doubt we will.
So I had one more, if I could jump in, that just hit me. So when you were talking about a client calling you or saying, hey, I want to do this sweepstakes promotion or this, $5 off when I swipe my card, the various promotions that you run. How labor intensive is that? Is that something they can almost do automatically? Like they have a login, they can log in and tell you what you want to do? Do they have to call someone and a human being has to set it up? And how difficult, how much friction is there to do that?
So great question. So if you go back to our first slide, we are what we call a PaaS company, not a SaaS company. Platform as a service. The second slide, sorry. Yeah. Platform as a service, right? The funny thing is our platform is a SaaS platform, software as a service, right? But these large clients don't want to actually do it themselves because in the world of marketing, they're so accustomed to the agency doing everything for them. So that said, how easy is it to deploy, right?
Yes.
I can't generate profitable margin if it was difficult to deploy because I need a fleet of people to do this stuff. Do you know what I mean? So it is really easy to deploy. The thing is, marketing is a very creative endeavor. So a client might say, hey, I want them to buy this and that, but not this within this period of this color and only these 6 products, right? So there's configuration that's involved, right? But it's very, very low lift. In terms of, the loyalty programs that we run for our clients, they actually log into the platform and run a majority of it. For some of the promotions that I was showing you on slide number 6 and 7, I think, right? Those do require a phone call to us, but not because we want the client to call us, it's because they just don't like to do stuff themselves and they're too used to someone doing it for them. So we charge them for it, right? It's all bundled into the price. But we do sell, our standards, our revenue model is quite simple. We charge clients an initial setup fee. We charge them an ongoing monthly license fee. And then we charge them a transaction fee for transactions going through the system. Now, if they want us to actually go out and actually build it for them and configure it for them, like we don't do the creative design, right? So they send us the creative, right? And we slap it into our platform, but the friction is actually quite low. I have, I think, 4 people who deploy out, our promotions in the company. That should give you a sense of how easy it is.
Got it. Thank you.
Well, yeah, if there are no more questions, I would say we can finish this here today. Atul, thank you very much. The presentation was great. The Q&A was, I think, even better. And yeah, I am, as I said already, I am very excited, as you are obviously as well. And I am looking forward to a bright future.
It is a bright future. I can see it. But yes, I think y'all will be very happy. I don't know who bought our stock today, but for some reason it went up 20% before this call, so I'm not sure what's going on. But look, just keep a lookout for our earnings. I think it, we feel very happy with what's happening with our business right now. So, and yeah, please call with any questions. Florian, you know where to reach me. Happy to share my phone number with everybody. But we need good quality investors who, who will stay with the company and grow with us, because I think we have a real opportunity here to disrupt not one but multiple markets. And we don't play games. We don't do funny stuff with our financials and our money raising and yeah.
Yeah, we love to hear it, and we love to participate in the story, I would say. And with that, thank you very much again, and thanks everybody for listening and attending, and see you soon, I would say.
Yep. Thanks. Take care.
Thanks,
Bye-bye.
Atul.
Thanks, Atul.
Some or all the speakers may maintain positions in the securities discussed in this podcast. The views in this podcast expressed are those of the speakers and not breakout investors. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Neither Breakout Investors nor any of its affiliates makes any representation or warranty, express or implied, as to the accuracy or completeness of the statements or any information presented by this podcast and any liability, including in respect of direct, indirect, or consequential loss or damage, therefore is expressly disclaimed. No one on this podcast is an investment advisor, and no one is providing investment advice. Before investing in any company's stock, you must do your own research. Thank you for listening.